Between February 19th and March 23rd, the S&P 500 fell nearly 34%. Since then, the index has recovered significantly, reaching new all-time highs in a year where such a feat would seem impossible. 2020 has been a year of significant volatility for the stock market, and with many stocks still trading at 5-year lows or more, many people are wondering whether now is the best time to get involved. However, taking the first step into the financial markets can be daunting, especially to someone who has little or no experience when it comes to investing. How's it going, everyone? My name is Dan, you can call me Malone, and today we're going to be taking a look at whether or not you should be considering investing in the stock market in 2020. We're going to be taking a look at 5 key considerations that should be taken on board before making any financial commitments to the stock market. The purpose of this video is not to convince you to invest in the stock market, nor is it to convince you not to invest in the stock market, but instead this video will hopefully provide you with some educated considerations that you can take on board when making the decision for yourself. So before we begin, if I could ask you to please drop a like on the video and consider subscribing to the channel. It really does help me out a lot as it pushes the video to bigger audiences and helps the channel grow. So without further ado, let's get started. The decision to invest in the stock market is one which needs to be considered holistically and will typically vary from person to person. Everyone has different wants, needs, goals and aspirations, so it's only logical that the investment decision be considered on a case-by-case basis. So how is this achieved? While there are potentially an infinite number of considerations to take on board when making an investment decision, I will be providing 5 key considerations which should serve you well in answering the question as to whether or not the financial markets are for you. The first consideration is financial vision. A mistake that many people make is entering the stock market without having considered what it is they want to get out of it. The stock market isn't for everybody, and you should really only be getting involved in the financial markets if you can actually visualize it being a part of your long-term financial vision. Everybody wants to make money on the stock market, but only those with a clear vision will be able to reap the rewards of being able to manage expectations and to measure their own successes and failures. Establishing your own personal vision for your investing activities and overall finances is a critical consideration for anyone looking to get involved in the stock market. So what exactly is a vision? Your vision represents your medium to long-term outlook with respect to your financial position and is often described as the end goal. For example, one investment-specific vision might be the ability to live off of dividends exclusively by a certain age, whereas a general financial vision might be the ability to pay off your household mortgage with ease. Whatever it may be, your vision is critical because it will often guide you in times of uncertainty. What you will typically find is that knowing where you want to end up will make it easier to create short-term objectives that will help make that vision a reality. Setting short-term objectives will allow you to refine the financial decisions that you make to be in line with your end goal or vision. If you can't visualize how the stock market might help you in achieving your financial vision, or if the stock market itself seems too far afield, then it's likely that you need to do more research before biting the bullet. The second consideration is budgeting. Let me make it clear, there is no amount of money too small when it comes to investing. It is perfectly fine and acceptable to start out investing at lower amounts, but what's really important is that you consider how much and how often you plan on investing. This is why the investment decision differs so much from person to person, because everybody is going to be in different situations financially. But wherever you may be in respect to your own personal finances, what's really important is that you pick a number and stick to it. When I started out investing, I was in the fortunate position where I didn't have to pay any rent. So I figured that if I invested at minimum the yearly market rent for a property here in Dublin, that is for an individual who's sharing, I would therefore be in no worse position than any of my peers should anything go wrong with my investments. So picking an expense that people around you pay but you don't can be a useful way to determine what amount of money you're willing to part with in order to invest in the stock market. Another simple budgeting technique is to look over your bank statements from the past year and to determine how much of your salary or wage you are spending each month. By working out what amount of income you're left with each month, you'll be able to take a percentage of this and transfer from your bank account to your investment account. By investing consistently in line with your budget, you'll find that your investment habits are stable, logical, and beneficial. The third consideration is risk tolerance. If 2020 has reminded us of one thing, it's that the financial markets bear a degree of risk. That risk is more often than not outside of our own personal control, but it can impact the value of our investments. However, that's not to say that some of this risk can't be managed, but it's critical that you first figure out what your risk tolerance is so that you don't end up taking on excess risk by entering the financial markets. You can generally figure out your risk tolerance by referring back to your vision from earlier. For example, how much uncertainty are you willing to take on to achieve a potentially larger end goal? How much time are you willing to put into researching your investments and educating yourself about the stock market? And what do you think your reaction would be to a large financial loss? Asking yourself these questions is the first step to figuring out exactly what your tolerance for risk is and whether or not the risks associated with the stock market are too high for you in order to achieve your financial vision. It might sound cliche, but you should never invest more than you're willing to lose, which will vary from person to person and therefore must be considered before entering the stock market. Understanding risk is definitely important, but what's also important to bear in mind is that risk can be managed with the help of educated and meaningful investment strategies. The fourth consideration is tax. Whether we like it or not, taxation is a very real consideration when it comes to the stock market. If you are thinking of getting involved in the stock market, it's important that you are aware of the taxation implications of doing so. Generally speaking, the two most relevant taxes to you as an investor will typically be both capital gains tax and income tax. I previously made a video about the taxation implications of getting involved in the stock market, so I will link that below in the description. But without getting into any complicated or specific detail, you generally pay income tax on the dividend income that you receive by virtue of holding a share in a company, and you pay capital gains tax when you sell that share at a price higher than what you paid for it. For longer term investors, income tax will typically be the main tax that affects you on a short term basis because your investment strategy will dictate that you buy and hold shares for long periods of time. And as a result of that investment strategy, you are not actively selling shares, thereby not actively realizing gains, and as a result, capital gains tax will not be charged. However, if you do plan on day trading or selling your investments on a frequent basis, then capital gains tax will be more of a burden to you because you will be required to pay over the tax that you owe on the realized gains in your investments to your relevant taxation authorities. In Ireland, dividend income and capital gains are assessed to tax under what is known as the self-assessment system, and what this effectively means is that you are personally responsible for computing your tax liability and paying over that tax to the revenue authorities. There are extensive rules and regulations in place which punish late payment or non-payments of tax, so it really is important that you as an investor understand your own personal tax position before entering the stock market, because these penalties and fines will represent a real cost to you if you do not handle your tax obligations effectively. The fifth consideration on this list is education. If you're planning on getting involved in the stock markets in any way, shape or form, it really is important to assess how and to what extent you're going to educate yourself about how the markets work. Educating yourself on the stock market isn't just about understanding how to buy or sell a share, but it's more so about obtaining a greater sense of commercial awareness that comes over time. Now, don't get me wrong, I'm not saying that every investor in the stock market has to actively educate themselves 24/7 about what is going on, but I am a strong believer in the concept that the returns that you obtain on the stock market are directly impacted by the time that you put into your own personal financial education. So what that really means is that if you are the type of person who isn't willing to put in hours and hours of research into investments, that's perfectly okay, but you will need to manage your expectations with respect to the returns that you can expect on your own investments. If you are someone who is willing to improve their own financial education, which I assume most of you are by virtue of watching this video, then you can build upon your own commercial awareness by reading business articles, staying up to date with business news, or simply researching companies that interest you. I personally like to stay up to date by reading business articles on Seeking Alpha and also keeping up to date on business news through outlets such as the Financial Times. Another aspect of your financial education that you'll need to consider is understanding the financial metrics that are typically cited in research articles about a given company. You'll typically see financial metrics like earnings per share, price to earnings ratio, and liquidity ratios quoted. And without getting into any specific or complicated detail, financial metrics are generally useful for performance evaluation, valuation assessment, and risk profiling purposes, although they are certainly not without their flaws. All in all, successful investment decisions are generally underpinned by sound reasoning and rationale, as well as the necessary due diligence, all of which is aided by a continuous improvement attitude to financial education. Therefore, you as a prospective investor will need to consider how much time you are willing to dedicate to improving your financial literacy before entering the stock market. So having considered each of those 5 considerations in detail, you should now be able to begin crafting an answer to the question as to whether or not you want to invest in the stock market. It's important to note that the level of consideration required will of course vary from person to person, but I do believe that some level of consideration is required across the board, no matter who you are and no matter what your previous experience is. The stock market definitely is an exciting place with lots of opportunities, but you should always take care when making the decision to place your hard-earned cash into any investment. Consider consulting a financial advisor if you are unsure about any prospective investment decision, and please never make an investment decision based on someone's opinion on the internet. So I really do hope you enjoyed the video today and you took something away from it. If you did enjoy the video, please do let me know in the comments below, leave a like in the video and subscribe to the channel, and I'll see you in the next one. Cheers.